the trade in a moment. Just let's quickly look at the international markets. Let's look at what traders are watching. Social media company Meta Platforms has scrapped its US fact-checking program following criticism from conservatives as President-elect Donald Trump prepares to take office for a second time. ExxonMobil signalled that sharply weaker oil refining results, asset impairments and lower oil prices would reduce its fourth quarter earnings by about $1.7 billion from the prior quarter. And US President-elect Donald Trump says he will move quickly to revoke an offshore oil and gas drilling ban announced by the outgoing Democratic President Joe Biden. Oil prices settled higher on Tuesday, driven by concerns over limited supply from Russia and Iran because of Western sanctions and expected higher Chinese demand. Getting to the technicals now, I spoke with Violeta Todorova from Leverage Shares for her outlook for 2025.
Yes, we've seen a very strong performance from US markets in 2024, and I'm expecting to see the bullish trend to extend into 2025. However, after such a strong run, we've seen US equity markets consolidating towards the end of last year, with the S&P 500 currently consolidating between 5,830 points and 6,100 points. So I think this consolidation is likely to extend further, and I'm expecting to see volatility picking up from here, given that last year we've seen a very smooth bull uptrend with very little drawbacks, which we saw in August. However, until Donald Trump is inaugurated on the 20th of January, I'm expecting markets to remain muted. And as we are entering last quarter of reporting season, which kicks off on the 15th of January, most probably we will see that volatility extending, and the market is now focusing where the labor market is going, how inflation is faring, and what are going to be Donald Trump proposed tariffs and policies, and how, of course, they will be impacting inflation in the USA. So currently the market is expecting 2 interest rate cuts in 2025. That's why we've seen this muted reaction towards the end of the year. However, the market still needs to see what migration policies would mean, and if we see the labor market in the US cooling down, we can see potentially three rate cuts in 2025 instead of 2, which will support the S&P 500. So I'm expecting volatility to kick in 2025. However, I'm still positive, and I expect to see higher price levels. So my 2025 year-end price target on the S&P 500 is around 6,700 points.
And Violeta, do you expect the technology sector to keep driving the US market?
Yes, that's a very good point, Sue. Yes, indeed, I believe the technology sector is going to continue to drive US equities higher. We've seen that the Magnificent Seven have been driving the gains, most of the gains in 2024, and all this capital expenditure into artificial intelligence infrastructure that we've witnessed in 2024 is likely to transition to monetization phase in 2025, and I'm expecting the artificial intelligence related rally to broaden out as more beneficiaries are arising. So my key pick remains the tech sector in the US, but I'm also quite positive on healthcare and financials as well.
And how about the Australian share market? We saw the ASX 200 reach a record high of around 8,500 in 2024.
We've seen a very good performance from the Aussie market in 2024. However, I should stress that we are seeing the Aussie market lagging behind US peers. Also, we've seen the pullback that started in December being deeper than US equity markets. And I'm slightly concerned monitoring the relative strength index on the sub chart that I'm showing here. We've seen the RSI dipping below 30%, which shows that internal momentum conditions for the Aussie market are starting to weaken. However, this doesn't change my overall long-term positive view on the Aussie market. And if we see a deeper pullback from here, that would represent good buying opportunity. I'm expecting volatility to kick in 2025, and the Aussie market is likely to be a little bit more choppy than US markets. However, once the second quarter kicks in, I'm expecting the Aussie market to regain momentum and bring the index to fresh new record highs, with year-end target for the XJO at around 9,000, potentially 9,100 points.
Now let's turn to the Australian dollar. We've seen a steep sell-off during 2024. Can you recap what happened and look forward into 2025?
Yes, we've seen a massive sell-off in the Aussie dollar, and actually that hasn't been just in the Aussie dollar. We've seen commodity currencies weakening across the board in 2024, and that's primarily driven by the strength of the US dollar, and in regard to the Aussie dollar, weakness in China as well has been the primary drag. With the US dollar, I'm expecting to see further acceleration of the uptrend, with the Dixie potentially notching 110 points against the 6 major currency pairs, which means that we might see the October 2022 support broken in the next month or so, which could potentially drag the Aussie dollar to around 60 cents against the US dollar. However, I'm not expecting massive weakness from here. I believe the Aussie US dollar will remain within the current very wide range, with support, strong support arising around 60 cents and strong resistance arising around 69 cents. However, in the first half of the year, most probably we will not see the Aussie trading above 63, maximum 64 cents, where most probably we will see strong resistance. So for the next 3 to 6 months, most probably the Aussie will be fluctuating between 60 and 64 cents. And in the second half of 2025, most probably we will see that minor resistance broken, and then the Aussie gradually shifts in the upper half of its current trading range. So we are near the low, to wrap it up, and I'm expecting to see just a little bit more weakness in the next month or so, but then we should see slow and gradual recovery in the Aussie dollar.
Well, let's take a look at Bitcoin now. That's received a massive surge from the election of Donald Trump as US president. It's hit above 100,000 US dollars again. Where do you see it going this year?
Yeah, we've witnessed a massive rally in Bitcoin, and there have been a couple of tailwinds supporting that rise. Most probably we will not see a repeat of the 125% gain that we've seen in 2024. However, I am still very bullish on the cryptocurrency. Currently, we are seeing Bitcoin taking a breather, with strong support arising around $90,700. So I'm not seeing much downside actually from here. And I think after this consolidation phase it's complete, we will see Bitcoin reaching new record highs. We have massive support from all the Bitcoin ETFs, which are enjoying significant inflows, which are likely to continue. And with Trump pro-cryptocurrency policies, we are likely to see further gains. So I'm expecting to see in the first quarter of 2025 the Bitcoin trading at around $125,000. Most probably we will see a short-term pullback, but year-end target remains $150,000. So this is a huge 50% upside from here. So investors shouldn't ignore Bitcoin despite the very strong gains witnessed last year.
And how about gold? Lots of uncertainty running into this year. We saw a bull run last year. Will that continue?
Yeah, I still remain quite positive on gold, Sue, but most probably similar to Bitcoin, we are not going to see the 30+% capital gains seen in gold in 2024. As soon as the Federal Reserve announced fewer interest rate cuts in 2025, we've seen gold taking a breather and consolidating. However, 2,541 key support appears solid, and I can't see much downside from here. So I'm expecting to see a correction in time rather than in price for gold. And I still believe $3,000 remains on track in 2025. I think gold traders will be closely monitoring the Federal Reserve policy, where inflation and labor markets will be going. And if we see a surprise third cut coming out of the Federal Reserve, that would be an additional tailwind for gold, and we can see potentially by the end of 2025 gold trading at around $3,100, $150.
Now, Violeta, one of your favourite sectors is the Australian Real Estate Investment Trust. So why are you tipping a good year for that sector?
Yes, indeed. I am back in the property sector, and although we've seen the property sector extending gains driven by the Federal Reserve and their interest rate cuts in the USA, I believe the RBA is very likely to deliver its first rate cut either in February, depending on what CPI later in January will show, or the latest in May. And if we see a few additional rate cuts by the RBA, that would be supporting the property sector. We are witnessing and enjoying very healthy dividend distributions. So apart from the index trading higher to around 2,100 points by the end of 2025, these dividend yields are going to keep investors very happy. So I believe investors shouldn't ignore the sector despite the gains seen in 2024, because once the RBA starts the easing cycle, the sector will catch up and the uptrend will accelerate.
And that does it for this episode of The Trade. Be sure to join us tomorrow.